Good afternoon traders, and welcome to today's daily market review. It is Wednesday the 8th of June, and today we're going to be looking at the US stock NIKE. Now this is a chart of the weekly time frame, and going as far back as 07 we can see that NIKE has been in a very clear uptrend. Okay, so I'm just going to scroll the chart back so we can see the strength of this uptrend. And if you notice, up until the present moment, there haven't really been any clear ABC corrections, and not on this time frame, that a trader could confidently forecast the termination point of and then climb aboard the trend. So if we go back to where we are currently, we can see that the market has begun to retrace or correct in a threefold pattern. Okay, that being a high probability A, B, C, D pattern. Now for those of you who watch our videos, you will know that the ABC or the ABCD pattern is a high probability reversal pattern, and once the termination point has been reached, the prior trend will generally reassert itself. So as usual, we're going to apply our four elements to the market, those being momentum, pattern, price and time. So in terms of this ABC pattern that we can see it began in and around the week beginning the 25th of December, and we have three zones, Fibonacci price zones, which we have built, two of which have been penetrated. So I'm going to drop down to the daily time frame so we can zoom in on the price action and also the zones, and then we're going to look at some of the areas that will be of interest to us in terms of calling the termination point of the C point or the C leg area. So this is the daily time frame, and we can see the clear ABC that we saw on the weekly. In terms of our three zones, we actually have four, but I haven't labelled the last one. Zone 1, we have 55,171 at 54,344. Zone 2, we have 53,760 at 53,164. And Zone 3, we have 51,970 to 50,78. Now, in terms of our momentum, we have the indicator in the oversold zone, and we can also go back to the weekly, and we can also see that we also have the indicator in the oversold zone. So this generally, in combination with everything else, generally means that the market should move sideways to up over the next few days and weeks. Now in terms of our preferred zone, we have the 100% symmetry projection of the A leg in our third zone. Okay, so 51,970 at 50,78 is definitely our preferred zone, as again it combines the 100% symmetry projection of the A leg from our B point. Okay, the market is currently sat on 53.60 at 53,164. And we can see that we have quite a strong reversal. This bar opened, came all the way down to a low. You just pull that low up for you. So it came down to a low of 52.70, but closed at 54.77. So we saw a strong rejection from zone 2. So from here we're going to be looking to our entry time frame to give us an entry signal as to when we should enter. What we're going to be looking for is a moving average cross of the 34 and the 8 moving average. Some of you may prefer a more conservative entry signal, and that would be the violation of the trend line. Okay, so we're on the 60-minute chart. We're going to be looking for a moving average cross to the upside, and then the taken out of a swing high. So currently the latest swing high is 54.54, or alternatively we're going to be looking for a violation and crossing of the trend line of the 60-minute chart. I just go back to the daily. Again, on the daily, we can also see that we have some time ratios up there, and we can see that the 14th and the 15th of June is an area of interest. Okay, so the 14th and the 15th of June has come up within a relatively narrow time frame from each other, and these are from two different time projections. Okay, so we're going to be looking for 51,970 at 50.78 as our preferred zone, but if we get a moving average cross and a taken out of the swing high, that would be a valid entry. Or if we get a violation and taken out of the trend line on the 60-minute chart, that would also validate our entry. So as long as our zones have been penetrated, we're then going to be looking for an entry signal, whether it's at our preferred zone or not. And again, 54.54 and a moving average cross is where we're going to be looking to enter the trade. In regards to our profit targets, we're going to be looking at the area of the 50% to the 0.618 of the C leg. So the 50% is at 59,010. The 0.618 is 64.83, and then beyond that point, we're going to be looking for the 1.272 and the 1.61 external retracement. The 1.772 sits at 68,645. And the 1.618 external retracement of the C leg is at 72,963. So in and around these areas, you're going to be looking to either take some profit off the table, tighten up your stops, or exit the trade completely. Okay, so Nike is set to resume the trend once the C point termination point has been met. We're currently looking towards the zone of 51,970 at 57.80, but the second zone of 53,760 at 53,164 could be the reversal, and again that is going to be based upon our entry signal.